Hello and welcome to Crypto Weeklies. In this video, we are starting with analyzing Cardano and its token ADA. None of the content is financial advice. Right now, we're starting with the composite risk score of ADA, which is at around 0.19. Anytime a crypto, which is older crypto, older than 2021, is in risk score less than zero point 0.3. It's again in an accumulation zone based on the overall composite risk model. This model calculates the composite risk based on the regression based, logarithmic regression based deviation, the time weighted average price based deviation, and 20-week simple moving average price based deviation. The relationship between those fair values on those three distinct models helps identify trend and valuation, and then also analysis of drawdown from the all-time high. How far has it come away from that level? What's the volatility and what's the beta and Sharpe ratio? So right now, all in all, the weighted risk for ADA accumulation is at 0.19. We'll start with the price of ADA and do a brief technical analysis before moving on to individual models. Right now, the price of ADA is at around 28 cents. It's below the 200-week simple moving average. This blue line, when it turns white, that means price is below the 200-week simple moving average. Again, this is ADA since 2021. We'll change it to since 2017 or late 2017, 2018. You'd see more data that way. And for the prolonged time, since ADA completed its first 200 week back in 2021, for the prolonged time since May 2022, price has been below the 200 week simple moving average. So a bottom below 200 week simple moving average is not on the cards, and right now the price is below this 300 week moving average, which is this red line which turns green when the price is about 300 week. The 300 week simple moving average for ADA is 67 cents. The 200 week is at around 50 cents. So price below both the key moving averages. Per the Fibonacci levels, again the price is very close to the bottom. Again, you can argue that the price today is essentially what the price was 4 years ago, even more than 4 years ago, back in December 2022, even in June 2023. This level over here, again, if you extrapolate it, you'd notice that the 28 cents level has largely been the support or floor that ADA has held for 3 times. Again, if the price has the tendency to come to this floor, there is eventually this eventual reality that if price comes knocking to that level constantly, there is this inevitable reality that eventually that support would get broken to the downside. That's the unfortunate reality with in terms of the technical analysis. The 20-week simple moving average for ADA is at around 43 cents. So there could be a rally. If there is a rally, that level could be a level to watch for. Again, this is the price 20-week simple moving average at this point in time, but it's a declining function. So couple of weeks from now, it could be well below 40 cents level. Looking at the monthly candles, what is evident is that price has largely given out all of the gains that it made since 2023 began. It's back at those 2022 price levels, and unfortunately, if there is further downturn, the price could go as low as about this level of support that ADA enjoyed from October November 2018. So that range over here is this unfortunate reality for ADA. If the bear market kind of continues, the next zone of support for ADA is not the fib channel over here. Let's look at some other channel instead of the fib channel. Instead of that, this parallel channel based range, let's say if we focus on that yellow zone over here starting 2018, the bottom of the zone is at unfortunately at around 3.5 cents, but it's an increasing function. So right now this bottoming zone is between 28 cents to about 7.5 to 8 cents. The midpoint is at around 16 cents. So this time around, if the support is achieved at the midpoint, that 16 cents could be the bottom for ADA. If it has to go all the way back to the end of the zone, then assuming this ascending trend line over here, 8 to 9 cents currently, and if it takes about June July 2026, then slightly more than that, and extrapolating out till about November 2026, this level could be somewhere close to 10 and 11 cents. So that's the technical analysis for ADA. Coming to the time weighted average price analysis as an indicator of what the current risk level is, this you can read up how this time weighted gravity helps identify the accumulation zone based on not just looking at the current price. The time weighted average price risk helps identify and consider where the price has spent its entire life. Undervaluation is below time weighted average price, that is essentially beating the clock at entering level where market has historically spent very little time. Fair value is at the equilibrium price, and anything above that is the overvaluation zone. Price has a tendency to spend over time above in overvaluation territory in the post halving years, or when though there is a typical bull market in the asset class, and in the bear market years, price has this reality of being lower than the time weighted average price. Right now the price is about 41% away from the time weighted average price. The time weighted average price is at around 50 cents. Right now price is close to 30 cents. So what I would like to ideally see is like it did in early February 2026, when the difference was larger than 50%. Those are some of the reliable bottoming pattern for ADA, or accumulation pattern for ADA. Again, this helps to filter out the noise instead of just looking at standard moving average such as 20 week, 30, 50 week or something. It helps measure conviction over time than just accounting for some temporary volatility in the ongoing bull market, or ongoing bear market, where there is a flash crash or a god candle kind of moving the needle too much in the simple moving average. And again, helps identify what's the time in market related argument, and also to identify the true cost basis of longer term holders if they are doing some DCA across time. So this helps identify if you are getting a better deal or worse deal than its historical average price, average holder of ADA. And this on top of this, there is a dynamic scaling based on the risk levels between 1 and 10, uh, essentially to identify distribution anytime, especially for altcoins such as ADA. Anytime the risk level is higher than 7 or even 6, that's when the distribution is ongoing, and again DC out makes the most amount of sense. Again, not financial advice. And the opposite of that is DCA in the trade whenever the risk level is in this one risk level. Right now we are in this lowest risk level per the time weighted average price based model. So this is the first component which says that ADA is close to an accumulation zone, again pending that drop to less than 50% with respect to the time weighted average price. The second most influential model behind the composite risk is this regression based fair value estimation. This polynomial regression model tries to cut the price action into two half. One is overvalued phase, the other is undervalued phase, and then this pink line is then estimation based on the two degree of freedoms polynomial time based, polynomial regression based fair value. That fair value for ADA is at around 60 cents. Price is below 60 cents, about 50% below the 60 cents level. But again, serious accumulation related deals occur closer to one standard deviation residual to the bottom. If you draw that one standard deviation residual away from the fair value, that green line over here is likely where the bear market bottoms occur. Again, this is a dynamic model, it's not a static model. So what was fair value today could be different fair value 2 to 3 months from now. And also this model retroactively fits the fair value to identify the overvaluation and undervaluation zone. Nonetheless, it's in one sense it's a live model. It helps identify with relative to prior market cycle, has ADA been more undervalued than to 2022? The answer is yes. Per this model, in 2022-2023, ADA did not go this undervalued with respect to its fair value than what it has already done in 2026. So per this model, again, it's not a coincidence that the composite risk is less than 0.2. That's because right now the regression risk has fallen off a cliff. You can see that in terms of the color codes here. Again, the worst case scenario for ADA is to go all the way to the 2 standard deviation bottom. That dark green line, that is the 2 standard deviation residual applied to the fair value. That's all the way currently at around 9 cents. That's the worst case scenario for ADA per the standard deviation residuals and the polynomial regression model. You can see how this is calculated in terms of the price of ADA and how these bands are visualized with respect to the polynomial degrees of freedom to fit the flexibility of the curve. Again, it says over here 4, but I know for a fact this is my own model. I just have to update this. We have modified it back to 2 degrees of freedom to account for diminished volatility in the asset class going forward from here. So just that change needs to be made in the code production. So coming back to ADA, the composite risk is 0.19. As mentioned previously, the models, again in terms of the regression model, again identified in and visualized on the same model that we saw in terms of the weekly candles is this daily dot plot, similar fair value, similar undervaluation zone for ADA, and the risk levels identified per the deviation between the price and the regression based fair value says only 3% risk at this point, accumulation risk for ADA. In terms of how the 20-week simple moving average price and 20-week simple moving average price risk is going on, the risk level is at around 0.18. This model again tries to look for a steep drop. Typically that occurs in the early half of the bear market, like it occurred in December 2021 or March 2022 and May 2022. Not typically at the bottom. You would notice that at the bottom the risk is actually in the current risk regimen in this blue color between 0.1 and 0.2. So that's exactly where we are per this model. Again, this is a derivative of the 20-week simple moving average price based deviation. The deviation between the price and the 20-week simple moving average is not that high in terms of proportion as well as in raw number as it was back over here in 2021, where the 20-week simple moving average was at that point at $2 level, where the price was somewhere reeling at around less than $1, and more so over here when the 20-week simple moving average in that major drop was at around $1.05, whereas the price had bottomed somewhere close to 45 cents. So in terms of proportion over here, it's less than 50% over here, because the 20-week is at around 43 cents and the price is at around 28 cents. So that's the reason this model has not gone to the lowest part of the risk level. Nonetheless, accumulating below 0.2 risk per this model is not the worst idea historically speaking. There are at least some counter trend rallies when the price goes to 0.1 risk level, although it does not identify the bottom to the dot. So these composite risk analysis per the trend is concluded per the valuation, per the all-time high based valuation. The overall asset class has, again this is all of major cryptos, how these risk levels are between 0 and 1 based on the metrics that we described earlier, the volatility, alpha, beta, risk adjusted return, and percent drawdown from the all-time high. This says that the asset class as a whole has gone to the 0.016 level as the wider crypto asset class has cooled, and the composite risk has gone down to 0.16. What typically happens is at the end of the bear market is, again not financial advice, like it did back in June 2022, the risk level goes below 5% or close enough to 5%. Ideally, anything less than 0.10 or less than 0.10, that is at less than 10% risk, is where the bottom for the entire asset class is closer than at the current moment at 16% risk. You can visualize this in the portfolio builder as well. The gem zone for the asset class per this efficient frontier is anything which has higher annualized rewards. This is since 2021. And lower annualized volatility. ADA is not in the danger zone, but it's not in the gem zone either. That means ADA has lower volatility than the, what you can say, the underperformers of the asset class, or the danger zone of the asset class, such as, for example, Algorand, Theta, Filecoin, AVAX. The cutoff line over here is this dotted red line. ADA has a negative return of 14% annualized. That means uh, holders of ADA since 2021 are losing money than gaining money. And you can see this perfectly from here. Again, if you are buying ADA somewhere in 2021, your cost basis is likely closer to a dollar, between $1.50 and $2.50, whereas the price is currently at around 28 cents. So there is a negative return of about 14-15% annualized. That means ADA has dropped 70% since that point. Again, but the volatility is not that bad as compared to the danger zone over here, where even though the return is better for Algorand, that is just negative 7%. Again, it's still losing money, but not as much, but the volatility is too high. And the Sortino ratio for ADA, which again looks for what's the volatility and what's the risk adjusted return per, and again punishing only the downside risk. ADA has a negative Sortino ratio as well. Overall, again, compared to its peer, ADA is definitely in this high risk zone in terms of the composite ranking, from based on how they have performed since 2021. ADA is in this unfortunate reality, is the bottom quartile, close enough to the bottom quartile to say that since 2021 the final ranking per the composite risk analysis based on these metrics, such as not the trend metric, the price metric, such as alpha, beta, volatility, Sortino, and max drawdown. ADA risk is at, accumulation risk is at 0.61. This is the historical risks in 2021. That's why ADA does not feature in this gem hunter portfolio, where the again just market cap heavy based gems of the asset class are determined by this portfolio builder. ADA does not have an an allocation to this gem hunter, because it's not in the gem zone. It has since 2021 has underperformed. The cryptos which are in this gem zone are definitely Bitcoin. ETH is on the boundary. One could argue it, if the boundary were to shift a little, ETH could make its entry. Bitcoin Cash, Bitcoin BNB, Tron. This is TRX, which is Tron, and then XRP, Maker, Link. Even Doge is on the boundary. Link is also on the boundary. So these are the gems of the asset class. Just to zoom it in. So again, you can find dedicated videos on each of them made on the YouTube channel since the last week or so. So today we are covering ADA just based on its volatility and its presence since 2017. So that OHLC, the overall technicals based risk summary, says that again the normalized risk is close to a bottom as price is below all of the key moving average, the 20 week, the 100 week, and the 200 week. This is just a snapshot of the technical levels. Before concluding, we'll look at the machine learning based price analysis. The machine learning based price analysis says that if there is a drop from over here, if we enter a 3 to 6 month drop from here, from mid February to mid March to mid April, let's say 2 months from here, the price of ADA could well be at around 16 cents. That's the case explained with that midpoint over here coming in at around, right now at around 18-19 cents. But again, if you extrapolate that, it comes close to 20 cents level. The bottom of the channel is all the way at around 9 cents. And for ADA to go to that 9 cents level, it would require severe downturn for about 6 months. So if there is 6 months more downturn in the asset class, that's the case for ADA to bottom at around 9 to 10 cents. That's still within the 1 standard deviation bottom forecast for the machine learning model. If there is a counter trend rally for a couple of months, then the price for ADA could go to 50 cents level. And if that were to happen, this line gets shifted a little from over here, and what is 10 cents over here, then from that higher point at 50 cents, it becomes closer to that 15-16 cents at the bottom. So that is also a possibility. Overall, the estimated bear market bottom for ADA, as it relates to all of the individual risk-based models, is the base case scenario is the current valuation. The worst case scenario is at 26 cents. That's what is identified by these risk-based models as the price is significantly lower than the time-weighted average price. The time-weighted average price has gone down. Regression risk is lower. SMA risk is also low. So all in all, if you were to tune out, and again, not financial advice, accumulation below 26 cents, not the worst idea per these models, but there is again a downside risk of about 50 to 60% if the price were to go and bottom out at around 12 to 14 cents. The estimated bull market target for ADA, again, now that we are in the depths of the bear market, it makes more sense to be bullish at this point than in the peak of the greed area. Again, it's always better to be bearish in the bull market and bullish in the bear market. Not financial advice, that's just logic. And again, the base peak forecasted if everything goes well, and if there is a major altcoin season in 2028, 2029, ADA manages to stick around. Right now, ADA is again sliding out of the top 10 cryptos by market cap, needs to get back into that zone to stay relevant. Again, this includes stablecoin, but again, that's not an excuse. ADA slipping out of the top 10 is definitely worth some sort of a concern. Let's see how the bear market settles and where ADA stands towards the end of the bear market, maybe at number 8 or number 9 spot. That would be ideal. And if that were to happen and in a proper altcoin season, the base and the bull case prediction per the risk-based model in 2028, 2029 time period, or even late 2027 time period for ADA is at around $3.12 to $3.30. That's from the current price about 11x to 12x. But if let's say the bottom is at around 10 cents, that's over a 30x from bottom to peak. And ADA has done that a couple of times in its journey. So from at its launched at 2 cents, went to about a dollar and 32 cents. That's well over 30x. 30x would be 60 cents. And again, from over here, from 2 cents level to at around $3 level, which was again several 100x. And again, the third time one could argue it. This time around, the third time it did not do that. From 23 cents at bottom, roughly speaking, it went as high as about a dollar 25 cents. So that was at around 5x of the low. So that's again a counterpoint for ADA. But again, this time around, the asset class did not have a proper alt season due to various reasons. If the next crypto bull run has that alt season, then the price of ADA per the estimation could be, again, not financial advice, could be at around $3.20, and that's about 12x of year. So with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.